Welcome back to another video. Today we are going to be discussing Google. I think this is one of the most beaten down stocks in the market as of right now. A lot of people are looking down on Google. There's this huge bearish narrative going around, which I think primarily is false. It has some truth to it, but people are overreacting in my opinion. So in today's video, we are going to cover the earnings of Google. We're going to cover my personal opinion on Google, and we're going to end this with a valuation to see if right now is the right time to buy Google. So with that said, before we start, I do have a Substack. I post detailed investment cases on my Substack. I have a community, a chat with like-minded investors. We're very active there. So if you do want to be a part of our chat, check the first link in my bio. You will head over to my Substack. You can subscribe for free. I do have a paid plan. You can pick it if you want to. You're not obligated to. I also release a lot of free content. You can just subscribe for free and you can join the chat and you can join others in the chat and we can discuss everything stocks related. So with that being said, we're going to jump into Google in the earnings, my view, and end with a valuation. All right, so we're right now on Seeking Alpha. This is a summary of the latest earnings call. I highlighted a couple of things I want to discuss. The first thing right here, Gemini 2.5 has achieved breakthrough in reasoning, coding, and other capabilities and is recognized as a leading AI model again. So my personal view on this is it's good. It's good to see that Google is investing heavily into their AI and making it a leading AI model again, because in my personal view, I had a feeling that Gemini was losing the battle with other large language models like Perplexity, ChatGPT, Copilot, and others out there. So it's good to see that Google has been investing heavily into their AI and that it's recognized as a leading AI model again. More on this, active users of AI Studio and Gemini API grew over 200% since the beginning of the year. This 200% increase resulted in 350 million users. Solid growth here. I love to see it for Google. Alphabet, Google, reported over 270 million paid subscriptions across YouTube and Google One. YouTube Music and Premium alone reached 125 million subscribers globally. Again, this is solid growth. If we look at the previous years, in 2020, they reached 30 million. In 2021, they reached 50 million. And in 2024, it was roughly 100 million. And we can see right now that it's already at 270 million. So that's year over year. It's excellent growth here. And I do think this is going to continue. And that is partially because I'll put a graph on the screen right now so you can see what I'm looking at. Right now, we're looking at a graph that is streaming in percentage of US TV time. And you can see it's from July 22 all the way to January 2024. And we can see that the purple line, that's streaming. We can see that in July of 2022, it was 31.5%. And last year in January, it was 36%. So we can see that streaming definitely is taking some share. And I definitely do think that YouTube will benefit from this greatly. So another graph I'm going to show you is streaming in percentage of US TV time and then compared with YouTube, Netflix, Hulu, Prime, Disney, and others. This is again in the same time period. Instead of ending in January 2024, it is in March. So if we look, YouTube, it's the dark gray one, it's the bottom one. We can see that YouTube continues to take market share from competitors. YouTube started in July 2022 with 6.7%, and we can see it's gradually increasing to 9.7% as of March 2024. So again, there's solid growth here. We can see it in the numbers. I do think the growth will continue in the way it is doing right now, since more people are streaming and more people are heading to streaming services like YouTube, like Netflix, and like Prime Video. So the market is huge. The total addressable market is getting bigger, and I think YouTube will benefit greatly from this. And I do think we could see this kind of subscription growth to continue. Back to management view. we can see here Waymo experienced a 5-fold increase in weekly paid passenger trips to over 250,000, with expansions in Silicon Valley, Austin, and Atlanta planned later for this year. This again, it's amazing. Waymo is not the only one, but almost the only one who is doing these passenger trips without any drivers, so full self-driving. Tesla is going to start in June of this year. They're going to test their pilot and they're also going to enter this market. But Waymo already started and they're already eating up the total addressable market as much as they can. So I'm going to put a graph on the screen right now, and that shows the total weekly trips in thousands for Waymo. So if we go to 2023, we can see that was 10,000. If we go to 2024, we can see it started in 50,000. Then at the end of 2024, it was 100,000. Then at the end of 2024, it was 150,000. A couple months later, it was 175,000. After that, we see 200,000, and right now we're at 250,000. So again, this is massive growth for Waymo. This is very good news for Google. It really looks like Waymo is going to dominate this market and eat up most of the total addressable market in the respective form. So if we're going to look at the outlook that management has given, management reaffirms a 75 billion capex plan for 2025, primarily for server, data centers, and networking to support AI and cloud growth. So I'm going to put a graph on the screen right now. This graph shows the capex spending from Meta, Alphabet, Google, Microsoft, and Amazon. And we can see that year over year, Google really has been upping their capex plan, really been investing back into their cloud and in their data centers. And it really is paying off, because I'm going to put another graph on the screen. And you can see that currently the leaders in the cloud are AWS from Amazon, Azure, and right below that we see Google Cloud at 12%. So Google has a significant piece of the pie. The total addressable market of cloud is only getting bigger since everybody needs cloud. Everything is going digital. The total addressable market is going to get bigger. And I think Google, Azure, and AWS really are going to benefit from this growth in the total addressable market. And I do think that they will continue to dominate this. Because if we look again, we can see that Google Cloud is 12%, and below Google we see Alibaba Cloud, and that's at 4%. So Google, Azure, and AWS really are taking the largest chunks of the cake right now. And it's good to see that Google is putting a lot of capex spending back into the cloud to continue to capture as much of the total addressable market of the cloud as they possibly can. So right now we're on FinChat. We're going to look at the segments of Google where we saw the growth in their latest earnings. So we're going to start with Google Search. Google Search in its latest quarter saw 9.8% growth. I think this partially silences the overall bearish thesis that Google Search is dead. Google Search, primarily the revenue comes from its ad revenue. And the threat of LLMs to that ad segment of the Google Search, I think, is, as of right now, pretty minimal. The management of ChatGPT, OpenAI, said they're not going to come with an ad type of revenue segment for themselves. They have a subscription revenue that's coming in, and they're going to keep it like that. So as of right now, there's still massive adaptation of Google Search. There's still a lot of advertisers advertising on Google. People are still using Google. There is still continued year-over-year growth. I'll put a graph on the screen right now of that growth. So I do not think right now there's a threat to Google Search. If large language models would integrate some form of ads being able to be run on their platform, I do think that we could see some decline in the Google Search. But as of right now, I do not think that's the issue. Another part is cost and scale. So Google Search handles billions. We're talking about billions of queries a day. And it can do it very efficiently, and it can do it very cheaply, and it doesn't require that much to do so. Large language models, they have these huge data centers, and with all these queries by everybody, it requires it's a high cost, it's a high energy. So the cost to scale ratio is also greatly benefiting Google right there. Of course, large language models, we're looking to get more efficient with them, more clean energy providing to them so it doesn't harm our, nature and everything like that. But as of right now, I do not think that LLMs have the scalability and cost advantage that Google has. So I do think that right there, there's still some benefit for Google. And again, indexing the web is still Google's mode. Google's infrastructure for crawling, indexing, ranking, and serving the entire web is unmatched. LLMs depend on high quality web content, and that web content is sourced from Google. So right now, the bearish thesis, I understand it, but I think it's exaggerated. I do not think as of right now it's a threat. LLMs are complements, not replacements, in my opinion. Of course, they'll eat into certain types of aspects from Google, like complex questions, summaries, code explanations. Large language models make that easier. So it is taking away some part of Google right there. But I do not think it's going to take away the majority of it. I do not think that it used to be a winner takes all. Now it is not a winner takes all, but I think LLMs are complements again and not replacements. And it's shown in the numbers right here. We can see that 9.8% growth quarter over quarter. It's showing excellent growth. I'm sorry, year over year. It's showing excellent growth. We cannot complain here. It's beautiful. I did not expect it, to be honest. I thought it would be a little bit lower, but almost 10% growth. It's spectacular for Google. So then we're going to go to YouTube ads revenue. Again, this is a wonderful business. It doesn't require that much for Google. We saw a 10.3 increase here, year over year. Network revenue, we saw some decline year over year, but again, this is not the biggest revenue driver for Google, and in my opinion, this segment doesn't hold much weight, in my opinion. Then we see Google subscriptions. Again, we saw a 18.8% growth year over year, solid growth, but again, this is not a huge segment of Google. The fact that they're growing, that's good. It's a subscription-based segment, so high margin, high netting. Then in Google Cloud, the most anticipated, we saw a 28.1% growth year over year. Again, beautiful. We love to see it. This really does indicate that the CapEx spending Google is doing is resulting in growth in their Google Cloud segment. All right, so now we're going to look at the profit margins of Google. If we're just going to take a quick glance, we're going to start from the beginning. We can see we had in 2022, we had a gross profit margin of 56.8. This gradually increased to 59.7. Again, showing the pricing power and the position of Google. If you look at the operating margin, we can see they started with 27.9 in 2022, and they boosted this to almost 34%. They missed by 0.1%. Again, overall increase showing operational efficiency by Google. EBITDA margin started with 33.5, and we can see this gradually increased to 38.9 right here. Net profit margin, they started with 23 in 2022, and this increased to 27.5 as of 2024. And right now you can see a massive spike of 38.3%. This massive spike is due to a sale of an investment Google did that almost got around $10 billion. So they can put it on the balance sheet. Their overall net income was higher, so their overall net margin was higher. So that's the reason for this net margin increase, because they sold an asset at a profit. But that aside, if we look at the overall margins, we can see margin expansion across the board. We can see operational efficiency right here with the operating margins. And overall, it's looking very good for Google. So nothing to complain here. I'm still very optimistic about Google. If we're going to look at their capital efficiency, we can see their return on invested capital has been pretty solid. They started with a 33 or 32.6 in 2022. And this declined a bit to 29%. Still roughly 30%, it's still a solid return on invested capital. Return on total capital, they started with 17.2% and they ended with 21%, as you can see here. So the efficiency with their capital is still excellent. I think the S&P average is roughly 10%, maybe a little bit lower, maybe a little bit higher. So they are far above the S&P average, and this really does mean that all their spending, their CapEx spending, is translating into solid revenues. For every dollar they invest, they almost get 30 cents back for it, if you look at the return on invested capital. So again, we see that Google is spending more on their capital expenditures. We see that they often tend to generate modest returns on invested capital, and that is good to see for us shareholders, because then we do know that Google is efficiently using this capital and deploying it at very profitable projects. With that said, we're going to go over to the valuation of Google. We're right now evaluating Google. I'm using price to earnings because Google is a very stable business, so price to earnings is very reliable in this case. And I'm using forward EV to EBIT, both forward, by the way. So if we're going to look, let's just remove this one to avoid any clutter. If we're going to look at the PE, the 10-year trailing median PE for Google has been 23.3. Right now, it's trading at a 17.6. So there's a severe undervaluation right here. I do think roughly a 23 PE for Google is more than reasonable and more than fair. So based on a PE, they are undervalued in my opinion. Now we're going to look at the forward EV to EBIT, that is earnings before interest and taxes. In Google's case, I sometimes use EBIT, sometimes use operational cash flow. It really depends on what type of valuation you want to do. I'm a big fan of the earnings before interest and taxes. So again, we're going to toggle the median line here. We're going to look at the 10-year median. So right now, their EV to EBIT is 14.7 and their 10-year average median is 18. So again, there is some severe undervaluation here. So in my opinion, what I'm seeing here is solid growth. Of course, the growth isn't as high as some is expected to be, but Google Cloud grew with 30% and we're seeing a severe undervaluation right here. I personally have been buying Google. I might be a bit biased because I am a Google shareholder, but I do think that Google has a strong outlook for itself. It is in the YouTube, that's a content and cash flow flywheel for them. They're in the cloud. They have a big share of the total addressable market of the cloud industry, and they're still growing at very high rates right there. So you have two very robust business models they have. It's generating solid returns. It has high margins. And if we look at the valuation, the current valuation is not justified for the type of business Google has, or Google is, I'm sorry. Of course, there are some issues with regulations, with privacy and lawsuits, but Meta has those issues. Microsoft had those issues. Everybody is facing those issues because they're such dominant players. So I do not think they deserve a beaten down because they're facing some DOJ type of lawsuit. I do not think it's worth to beat down Google for that reason. Google is overall a wonderful business. Management, it's excellent. They have high returns on their capital. That means they're efficiently putting their capital at work, creating shareholder value for us. They're having margin expansion. They have very robust revenue segments, which I really do like. And I think Google right now is severely undervalued. Well, severely, it's undervalued. I think they still have strong growth ahead of themselves. Yes, there are some temporary headwinds, but I think in the future there will be more tailwinds than headwinds. So with that being said, I am a fan of Google. I do intend to buy more shares of Google for all the reasons I just mentioned, and I will continue to hold Google. So that is it for today's video. Before you go away, I want to remind you again to visit my Substack, the first link in the bio. If you want to use this program, what I'm using, you can use it 2 weeks completely for free. You don't need to fill in any card information, and you can try out the full version for 2 weeks. You can use the link in my description. When you use the link and you do sign up for a subscription, I do get a small cut of this the subscription because I am an affiliate with FinChat. Your plan does not get more expensive. You get a genuine discount, and I just get a small cut of the cake because I recommended you to them. So if you want to try it, 2 weeks, no card required, link in the bio, and you can start using this program. I truly do enjoy this program. I use it for everything investing related, and I would highly recommend you using it. So with that said, thank you so much for watching. I hope you found some value in this video. Be sure to leave a like on the video. Also subscribe to my channel if you're new, and I truly do hope to see you on the next video. Cheers.